Ladies and gentlemen, may I have your attention, please?
Covering both sides of the big issues with the analysis you trust on Newsradio 1040 WHO.
Wendy Wild in the WHO radio newsroom. Wendy reporting that the Fed yesterday held interest rates steady, and then some of the governors hinted that there might be an increase later in the year. What? Well, my next guest is a #1 Amazon best-selling author, a business leader, Dan Varroney. Dan's got a column out that he says, look, the Fed is really misreading the economy right now. Dan is on the Davison Family Dentistry Newsmaker line. Dan, welcome back to WHO. Good morning.
Good morning. Happy to be back, Jeff.
So tell me your reaction to what the Fed was talking about yesterday. I've got your column, and you certainly think there's a misread of the economy going on, don't you?
Yeah, I do. So, we're in the middle of an energy shock. It's not an overheated economy, right? So 60% of the inflation numbers that we're experiencing are coming from oil. Oil is in almost every product category, and that's why we're seeing higher inflation. Now, there's still core inflation that's high at 2.9%, but the case that I made in this op-ed article is like, hey, this is about the energy price shock. And don't make more of that than there is. And as you see from yesterday's vote, half the Fed Board of Governors were ready to vote for a rate increase, which I think is just insanity because they're not looking at the data. And what is driving the inflation numbers? Clearly, it's the energy price shock, at least 60% of it.
So, Dan, as we come to you this morning, the president has signed the Memorandum of Understanding with Iran. CBS News reporting this morning that there are more ships actually transiting the Strait of Hormuz. So, to your point, we're going to see lower energy prices in just a bit, aren't we? And that's got to go into the decision as to what the Fed's going to do.
Yeah, absolutely. So, on one of my two large screens, the WTI crude oil, that's the West Texas crude oil, is down to 75 and change a barrel. And we want it to get down to the 60s because that will get prices back to where they were pre-Iran war. Now, let's give your listeners an important heads up on this. There's a bit of a supply challenge, right? So globally, we're down between 1.5 billion to 1.7 billion barrels. And we've got to get that supply built back up. As that supply is built back up, as the strait opens up, Strait of Hormuz, meaning they will increase supply, and that supply will exceed demand, and we'll see these per barrel prices come down, gas prices come down, and most importantly, over the next few months, we'll see diesel prices come down. That's the key to lowering our food prices.
So, Dan, will it be in time for the next election? Obviously, the president hopes for that. He also hopes for an interest rate cut. What's the possibility of that?
So here's what I think. I think the next couple of weeks, we're going to see a drop in gasoline prices. I think over the next 3 or 4 months, we're going to see the gas prices fall even further. I think it'll be late in the fall, close to the end of the year, before we see a substantial price drop in diesel fuel and then food prices. So I think it'll be close. Regardless, I think that voters, when early voting starts in mid to late September, they'll start to experience lower prices.
And then could we get lower interest rates, Dan? What do you think?
So what I really like there's a lot I like about Kevin Warsh, primarily, previous Fed chairs, the last Fed chair, years of tradition unhampered by progress. Kevin Warsh comes in, sets up 5 major task forces to look at everything, including not only how they collect data, but how they report data and how they render opinions. So I think there's a chance as we get to the end of the year, if energy prices come down and food and goods prices come down, I think there's a chance there could be a cut, but late in the year.
He is a business leader and a #1 Amazon best-selling author, Dan Varroney, one of my go-to guys when there's economic news to chew over. Dan, thanks very much for joining us this morning.